Hi, it's Hewison coming to you as always from the digital studios of MarketClub, and the market we're focusing on today is the euro versus the US dollar. So the symbol is EUR, which is obviously for euro, and the USD, which is obviously for the dollar. So what happens is when this on the graph the market's going up, it means the euro is going up and the dollar is going down. When you see in foreign exchange the first three letters, EUR, that means that's the lead currency in terms of the direction of the market. When the market turns down like it did here, it meant the dollar was getting stronger, the euro getting weaker, dollar getting stronger, euro getting weaker, dollar getting stronger, euro getting weaker. So let's take a look at what this means right now for the market. So I'm going to take everything off the screen, go up this in a little further because I want to show you something I think is very important to watch right now. So I'm going to use a tool called the Fibonacci tool. So we're going to go from the highs right here down to these recent lows, which you can see right here. Very important element. And let's straighten that up. Okay. And we'll scope this in just a little bit further so we can get an even more accurate reading. So let's move this one right up to this last low. I think it's probably more accurate. So anyway, here we are. We're looking at the cross rate, the EUR USD euro dollar cross rate. And when we're seeing the market, for example, when we're seeing the market go this way, it means the dollar is getting stronger and the euro is getting weaker vis-a-vis the US dollar. Now, coming into the end of this, looking at this year here, you can say this is pretty much the end of 2009, and the general consensus, conventional thinking was the dollar is going to continue to go down because of the massive deficits that we're running right here in the US. But look what happened. Suddenly the euro was under pressure because of Greece, Spain, Portugal, some of these countries that we don't pay that much attention to, that are part of the Eurozone area. So the question is now, do we continue going down, or does the market change, and do we see the market go higher, meaning the dollar going lower? And that's what we want to address today. We've drawn in our Fibonacci numbers, so you can see 38, 50, 61.8. I'm sure if you've been watching these videos before, you're very familiar with these numbers. And we are very close. I'm just going to scope this in even further because I want you to get a really close view of this and give you an idea of where we are. Now look at this. We've gotten down a few times to the 134.75 level, and we've sort of bounced right here. We sort of bounced up. And the other thing to look at, in my opinion, is the MACD. We've looked at this before, and this is what we consider to be a positive divergence. We've seen the line actually going up. We're making new lows here, yet the line's going up. We've crossed over which means the line has gotten over and changed direction. You've gotten plus on this from being down like this. You see how it's crossed this sort of zero line, which means there's a lot of pressure being taken off this market. Now the market's generally very short euros, and you could see a run, a short covering run, back up to maybe the 140 area, which would not be out of the realm of possibility, even perhaps further. But that's something to be very careful. I would not be too short this market. I would not want to be shorting this market in a big way at these levels, because this is a very important retracement level, Fibonacci number, and your chances are we're going to see a reversal from this area. So hey, this is Adam Hewison. We're looking at the Euro USD cross, which could be at a tipping point. Thanks for watching. Every success in the market.